Namaskar and welcome back to another video from Kotak Securities. The weekend is here, that means it's time for the weekly currency insights. Now, first, let us take a look at what the currency performance has been. Now, a simple look at the graph tells us that the JPY-INR was the massively underperforming currency, and the GBP-INR was the best performing currency of the pair, of the lot. Now, we'll dig deeper into why that was. So, let us get started with the things that have happened in the previous week. Now, specifically from the USD-INR point of view. So, if you people have been tracking the market, if you people have been tracking the currency market, then you would know that the market has been quite fragile. It has been reacting very swiftly or briskly to the news developments. And one of the main events that people were looking for in the previous week was the US CPI data and the FOMC minutes, as people wanted to get a gauge of what the Fed's next move is going to be. Now, the message was very clear from the FOMC minutes, and it was no pain, no pivot. And the US CPI coming in higher than expected also took the expectation of a 75 basis point hike in the next FOMC meeting a notch higher. Now, from the India specific point of view, India's inflation figures were also in, and that also came in quite hot. So we could expect the RBI also to continue raising the interest rates in the next meeting. Now, technically speaking, we have been seeing consolidated moves. Now, the expectation of the Fed raising interest rates and the RBI raising interest rates has kept the dollar rupee pair in a move. Nonetheless, the overall trend continues to remain higher. So, if you have seen for the past, I believe, 6 to 7 sessions, the dollar rupee has been taking support somewhere near the 82 mark. And it has been facing quite, a task. Breaking below that support level is not something that we see in the near future. So, at the moment, we see consolidation before the next up leg starts. Now, looking at the Euro INR. Now, technically, you see that the pair is actually moving in a downward sloping channel. And the overall chart structure, as we've been mentioning in most of our reports, is that it is negative. The overall chart structure continues to remain negative. And in the previous week, there were no major events that were actually driving the Euro INR. It was more to do with the direction of the dollar. So any up move in the dollar or any down move in the dollar was tracked closely by the Euro USD pair and in turn by the Euro INR pair. So for the past two sessions, that is the later half of the week, was actually quite good after we saw a strong bounce in the Euro INR off the 79.50 level. And it kind of continued that through Friday. Now, GBP INR is where there was a lot of news. Now, there were a lot of rumors around the bond buying continuing, or the BOE secretly telling or privately conveying the message to the banks that they have to continue buying the bonds. And there were also speculation about the tax cuts. Now, the BOE members were supposed to come out and give a clear clarification as to what that was, but instead they ended up telling that they would give a proper clarification on the 30th of October. Now, the speculators thought of it as an end to the tax cut or a probability of no tax cut, and that is why we saw massive exponential moves in the GBP INR pair. Now, technically speaking, now for the past three sessions, the pound has been moving higher. The GBP INR pair has been moving higher. Now, if you see on the chart, some after taking a support somewhere around the 90 mark, we saw strong uptrends and move towards the 94 level. Now, this level, if you look at the chart from probably from May to September, the 94 to 94.30 zone has acted as a good resistance support. So going ahead, that level is expected to act as a resistance. And at the moment, the GBP INR is placed at that crucial make or break level. So if it manages to move above from here, then the GBP INR pair is going to continue flaring up. And if it is going to take some resistance at this point of time, we'll see the GBP INR pair again going lower. So the price action at this point of at this juncture, at this point of time, becomes a crucial thing to watch for. The next was the JPY INR. So in the previous currency insight, we had mentioned that there were interventions from the BOJ officials or the members of the finance officials, and that actually gave a massive boost to the JPY INR pair. So once the dust settled, the participants went back to focusing on the policy divergence. Now, policy divergence is very simple, and if I have to explain it to you in simple words, it is one central bank keeping the policy ultra loose while all other or all major central banks actually going for rate hikes. Not only rate hikes, massive rate hikes if you look in the current scenario. So, BOJ or the Bank of Japan is the only central bank at this moment who is opting for an ultra loose policy, while the Fed, as we know, is in a rush to increase the rates. They are continuously increasing the rates by about 75 basis point. The expectation as of now is that in the next meeting they would raise the interest rate by 75 basis point. Now, all this is actually making it harder for the participants not to focus on the policy divergence. What policy divergence does is basically it leads to a capital flight from the lower yielding currency to the higher yielding currency. The lower yielding currency in this case being the yen, and the higher yielding currency in this case being the dollar. So the increasing divergence in the policy between the BOJ and the Fed, the Bank of Japan and the Fed, that is the Central Bank of Japan and the Central Bank of the US, is what is leading to an increase in the policy divergence. Secondly, the yen, as we know, closely follows the US 10-year bond yields. So the bond yields sustaining near the 4% mark has also put up tremendous pressure on the yen. Now, technically speaking, once the participants started focusing on the policy divergence, the downward drift that we had been talking about in a couple of our reports or a couple of, in probably in our last weekly insight, turned to be a massive downfall. Now, if you see, we have actually shown a range here in the dark black bordered box. Once that level was taken out, the down move was quite swift, or probably I would say somewhere around the 57 mark. Once it took resistance near the 57 mark, the downward move was very swift. Now, what are the events that could actually end up spiking up the volatility in the next week? So one of the event is going to bring some volatility in the dollar, that is the US manufacturing index. The second is the UK CPI. Now, bear in mind that the inflation in UK is at a multi-decade high, not even years, I would say multi-decade high. A print that comes above than expected is going to, I mean, a higher than expected print, a higher than expected inflation figure is going to put a tremendous amount of pressure on the pound, and vice versa. So these are the two major events that we feel are going to spike up some volatility in the next week. Now, currency is going ahead. So for the dollar rupee, as we told that the dollar rupee at the moment is actually moving in a range, and the range broadly is somewhere in between 82.10 and 82.85. Now, this has been the range for the past six odd sessions. So we expect this range to be held. For the Euro INR, again, it is kind of a range bound move, and the range is actually slightly broad. So it is 80 on the downside, that is 80 can be expected to act as a support. But at the same time, the 81.40 level on the upside, it can be expected to act as a resistance. For the GBPINR, the massive volatility that we saw this week has actually led to a range expansion. And overall trend of the pair actually kind of remains bullish. So remember the 94.30 zone that we were talking about. So around that level is where we could expect the resistance to be, and on the downside, the 92.50 is where we see the support act. Now the JPYINR, again, the massive supports have been taken out, and on the downside, 55.40 is where we expect the support to come in, and on the upside, 56.70 is where we expect the resistance to come in. So that's all for the currency, the weekly currency insights for the week. Do subscribe to our YouTube channel for further updates. Do subscribe to our Telegram channel, Currency Corner with Kotak Securities, to get daily updates of what the events that have happened, the analysis, our side of analysis, and also for other updates related to the currency markets. Thank you for tuning in. See you all in the next video. Till then, stay safe, trade safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.